Hey everyone, I'm Emily Marsh from the Greater Concord Chamber of Commerce. I want to thank you for joining us for our webinar today with Orr Reno, PA. We are really excited to continue this series online. It used to be a legal breakfast series, but we've changed to this virtual format, which is really great, and we love doing them in this new way. So I do want to let you know that during today's presentation you can ask questions. To do that, you're going to want to use Zoom's Q&A portal. So just move your mouse or tap your screen and you'll see a button called Q&A pop up. You're going to click on that and then simply type in your question. It will only be seen by our panelists today and me, so it's anonymous to everyone else attending the webinar today. So go ahead, use that throughout the program if you think of a question. We may answer it, as it comes up, or afterwards take a bunch of questions as well. So again, to ask a question, click Q&A, type it in, and you're all set. We'll take it from there. I want to thank Orr Reno, PA again for this series. They're sponsoring this and providing these great presentations. And without further ado, I want to introduce you to Robert Carey, who will be going over today's topic.
Hi, good morning, everybody. My name is Bob Carey. I'm a lawyer here at Orr Reno in the litigation department. I'd like to thank Emily and Tim Sink and the Chamber for putting on these legal breakfast series and this particular webinar. Normally we'd all be gathered around a conference room having cups of coffee and bagels and swapping stories about our families and work and that sort of thing. But we'll make the best we can out of the webinar format. My topic today is protecting your business from fraud. And the kind of fraud that I want to talk about is internal fraud, fraud where somebody inside the company takes advantage of access and trust and steals money. It is a serious problem for all businesses, and it's a serious problem, and maybe even more of a problem with the remote format that so many of us are working under these days. Typically, it's an office manager or in-house bookkeeper, and why it's such a problem and why is because it's such a breach of trust. And it also can impact significantly your bottom line, your business reputation, your internal personnel culture. And the groups that track this, compile data on this kind of business fraud have found that it hits smaller businesses much more disproportionately than it hits larger businesses. And they draw the cutoff at about 100 employees is considered a small business for these people that, these groups that do these surveys. So that's most of New Hampshire. New Hampshire is a small business mecca. And so many people have taken advantage of the opportunities in the state to start their own business, grow it, and have some success. But New Hampshire still is a small business, entrepreneurial-based sort of state. The sort of median amount or average amount for fraud, employee fraud, is in that $200,000 to $300,000 range. And most of the schemes that are discovered, a year or 2 years in duration. And that's a significant, when you think about the disproportionate impact it has on small businesses and the average amount of money that's at issue with these employee thefts, it poses a huge risk for businesses. Now, the numbers of employee fraud that are reported to, I think, are probably underreported. Just as the incidence of elder fraud, which is also a serious issue, is underreported. It's underreported because people don't want to admit that they've been taken advantage of or that their trust has been exploited. And it's the same with businesses too, in reporting the amount of fraud that goes on. I mentioned that this kind of employee fraud can be just wreak havoc with your business. It can wreak havoc with the culture of your business because it's such a breach of trust. It can wreak havoc with your business reputation because it can look like that your business, your customers or your clients may wonder if something like that could happen internally in your business, then they might have concerns about how their accounts are being serviced. And it also can, of course, really hammer your bottom line. There is insurance for this, and I'll discuss that later, but not many small businesses can bounce right back from a hit of $200,000 or $300,000, and many businesses can't bounce back from it. So what I would like to talk about in this seminar, and I've decided, because everybody has so much Zoom fatigue, I know we're booked for about an hour, I'm probably only going to speak for about 20 minutes, and I'm hoping, because we've got a small group, we can have some questions. But what I'd like to talk about with you is sort of how this happens, and more importantly, what you can do to prevent it, to safeguard against it. No system is absolutely fail-safe, but there are 5 things that you can do, and I think 5 takeaways that I hope you get from this webinar. So how does this employee fraud happen? It's a crime of opportunity, and it's made up of a couple things. One is trust. The phrase a con game is an old-fashioned, it's been around forever, and it's shorthand for a confidence game. And a con man or woman is able to gain your confidence and exploit your confidence or your trust to take advantage of you. So that's what a con game is. That's what a con means. The second thing that's needed for this sort of crime of opportunity after trust or confidence that's gained is opportunity. Opportunity comes usually from a lack of oversight or over-reliance on one person. And when you think about these 2 things, trust and opportunity, you can see why this kind of fraud hits small businesses disproportionately. In most small businesses, you want to, you have very close relationships with your employees. You want to be able to have people wear as many hats sometimes as possible. So you might have somebody who's a bookkeeper or office manager, and you rely upon them heavily to wear many hats. And so at a bigger company, there might be a much larger finance department, and there might be a lot more duplication and redundancy. In a smaller business, you don't have setup, that framework. And so you have people who you trust and who you rely upon, and you delegate to these people. You sort of delegate and be done with the assignment. And a lot of the accounting stuff and bookkeeping stuff can be very tedious. And if you're out trying to get customers or train new employees or market your business or service your clients and customers, that's your focus, and that's your focus on growing your business. And you have somebody doing the sort of back office financial stuff so you don't have to, so that you can prioritize growing your business. But it's that kind of dynamic that allows some of these employee thefts to take place. It's exactly that kind of environment that allows these employee thefts to take place. When you've delegated something, you've trusted somebody, and there's not as much oversight or duplication or redundancy or backup, and that creates an environment for these kinds of issues. I think that dynamic is even more sort of in play with remote work. There are certainly some efficiencies gained by remote work, but there's also even greater lack of oversight, and even greater opportunity for temptation for people who are handling money for your business. And so the challenges of remote work, in addition to sort of the cultural, maintaining the cultural culture of your company and of your business, there are other challenges too in terms of oversight. And a lot of people, by going to a remote format, have sort of streamlined things and sought to make things more efficient by saying, okay, this person's going to handle all the finances and they're on their own. They've got the access to the accounts. They've got the access to all the financial data and information, and I'm just going to let that person do their thing. And if they are working in their home office or in their kitchen or somewhere other than the physical office, there's less oversight, and there's more reliance upon one person doing many things. So the remote work environment also sort of creates different challenges of oversight to prevent this kind of employee theft. What I want to transition to next is talking about, I'll give you some examples, some stories about businesses that fell victim to different kinds of embezzlement schemes, internal embezzlement schemes. And then at the end, I think I'll talk with you about sort of the 5 things that a business can do to sort of protect themselves from falling victim to these kind of schemes. One sort of hypothetical or story I'll tell you is about a business, and it involves their payroll service. A lot of businesses rely upon outside vendors for their payroll. Many businesses do. And this particular business had a transition to an outside vendor where the bookkeeper would provide the time information and payroll information to this outside vendor, who would then cut checks or make direct deposits. And that was a sort of a streamlined way and cost-efficient way that this business had moved to. The issue was this one employee had been with this business for a number of years, had an office to themselves, had the computer to themselves. And when this business transitioned to this payroll service, this employee, this office manager, was the only one trained on this platform. And so no one else had access to, no one else did this work. No one else had access to the portal, so to speak. And that's a perfect setup in a way for what I'm about to tell you happened. This person also sort of, there were signs of disgruntledness and some defensiveness to oversight, which in retrospect can be red flags if there's a change in someone's attitude and a resentment and disgruntled attitude. It can be signs that there's something going on. So in this situation, many employees got their paychecks direct deposited into their accounts, as many of us do. And this particular business had a lot of seasonal employees, and so they would, work for 4 months at a time, and then resign or leave. And what this employee did was, when first they set up multiple accounts in different banks on their own, and then when an employee might leave, resign, transition out of the seasonal employment and find other work, the employee would change their direct deposit information to this employee's own account, or one of this employee's several bank accounts. And so the company was paying people, in essence, paying wages to people who weren't working there anymore. And these wages were going into this bookkeeper's, one of their accounts. The payroll company would send monthly, bi-monthly statements showing, here's your employees and here's your total wages at the bottom. And this employee would manipulate the PDF to delete the names of the people who were no longer employees, whose paychecks were being deposited into the bookkeeper's accounts. And so a quick glance of looking at the bottom line wouldn't tell you that the numbers didn't add up. So this went on for a while, and it took a while to finally uncover this. The second second story I'll tell you about involves another company, a small business in New Hampshire, who had an office manager who, with her partner, created various LLCs and registered these LLCs with the New Hampshire Secretary of State's office, and just, random names. And this office manager had complete access to the bank accounts. She was the one who was responsible for cutting checks, depositing checks, everything. And had been with this company for probably 10 years. And sort of was the right hand from the financial standpoint, did everything and was relied upon to do everything, and was believed to have been doing a good job. This business was operating on tight margins anyway, and the board, or the owners of this business, always expected that they would have not to be short, or expected to be making a little more money than they really were. And what they found out had been going on was that this business manager, this office manager, was cutting checks. Was the LLCs, and there was probably 8 or 10 of them that had been set up with her partner, would send dummy invoices to the business for services rendered, and the office manager would cut checks to these for these dummy invoices to these LLCs, which her partner was she and her partner were in control of. So they looked like ordinary accounts payable, looked like vendors. They had a paper trail of invoices for services, but none of these services were being provided. And this is how this office manager was siphoning money from this business to her and her partner. This went on for a number of years, and was extremely costly for this business. Luckily, this business rebounded, but it was very difficult. The third story I'll tell you about is involved sort of maybe 2 more sort of traditional ways that you might think that employee fraud would happen. One is with credit cards. And this particular employee, again, an office manager, received all the credit card statements mailed to her house, and reviewed them. And the CEO was sort of hands off, and that arrangement was fine with him. And so she received the credit card statements to her house. She cut the checks for these American Express and Visa and MasterCard statements. And what she was doing was purchasing, outfitting a new kitchen for her house, leasing cars, buying tools, taking vacations, and it was a significant amount of money. And it went undetected because nobody else got the credit card statements and could review them. And it was a significant amount of money that ended up being stolen. And it was an employee who had worked for a number of years, maybe I think 6 years, for this particular business. Those are sort of 3 sort of examples. There are many different sort of permutations of how money is embezzled from businesses internally. But I think you can see sort of some of the themes and some of the situations that create opportunities for this kind of for employee theft and employee fraud. So what I want to talk about is how you prevent, what things you can do to prevent this. And it's 5 things, so you can count them on one hand. The first thing is making sure you do your background checks and check employee references. In 2 of these situations, the background checks would have revealed issues with poor work performance in one situation, and somebody who was fired for the same kind of sort of financial irregularities. The former employer couldn't quite figure out what was going on, but thought something was fishy and just let this office manager go. And in the last situation, the credit card situation, there was no background check done, and if it had been done, it would have revealed that this person had been convicted of theft before, theft from an employer before. So the first thing is background checks and checking references. Something that's simple. It can be time consuming, but it's something that sometimes is overlooked. Is having some redundancy. So, you don't want to have to rely upon just one person for everything that has to do with accounts payable, accounts receivable, for the finances and deposits and wires. You want to have backup systems in place if you can. You want to have redundancy, and you want to have some overlap. So sometimes some people will have one person responsible for accounts payable and a separate person responsible for accounts receivable, or receipts and deposits are handled differently. So that's the second thing. You've got background checks, you've got redundancy. The third thing is you want to make sure you review finances and the accounts on a regular basis. It is time consuming. It is something that many people prefer not to, because you want to delegate that to somebody you trust. But in many of these instances, if the credit card statements were reviewed, if there was a list of payments to different vendors, and maybe these bogus vendors would not have been recognized, if there is more sort of attention paid to the bank account statements, credit card statements, then maybe some of these things would have been caught. And these, as I mentioned earlier, these frauds don't happen overnight. There's an opportunity. And if there's systems in place for reviewing finances, and reporting what's going on with finances, that would deter many sort of would-be fraudsters from taking advantage of a system. If they know there's oversight, then there's no opportunity for this kind of fraud. So you've got background checks, you've got review, you've got redundancy. The fourth thing is there is insurance for many kinds of employee theft. And you hope that you never have to use it. You hope that it never happens. But if it does happen, a significant theft, if there's no insurance, can be very hard to deal with. You may have to borrow money. You may have to lay people off. You may have to forego paychecks. And it's not fair to the other people in your company to have to suffer the consequences of somebody's theft. So there is insurance for employee theft that's available to many businesses, and it's a good investment if it's available. The fifth thing is sort of an audit by an accountant, taking a look at sort of a close look at sort of all the finances, and being able to tie things out, and being able to check to make sure there's no irregularities. And also, many of the accountants, and there's some excellent accountants in Concord that we're fortunate to have, who are very good at this kind of stuff. They can also make suggestions as to how you might improve systems, how you might have a little redundancy, how you might have a little bit more, build some safeguards into your business finances or financial practices that can help deter this problem. So those are the 5 things, and you can count them on one hand. Again, it's background checks, review, redundancy, insurance, and audit. And I didn't think of a snappy way to make a slogan out of them, or an acronym out of them, but it may be possible. The other thing to think about is, if you are victimized by what an employee theft, is what you do. Many people don't go to law enforcement and try to handle things quietly. Sometimes that just passes the problem on to somebody else. If you have insurance, those for employee theft, those policies require a report to law enforcement. And so that will lead to most likely criminal charges. And that again is a significant deterrent for it happening in your own business again, or allowing that person to victimize somebody else. There are, and a good employment lawyer can guide you in terms of how to investigate if you believe you are a victim of some sort of financial fraud, how to investigate it, and employee who's at issue, who you believe is doing this to your business. I see that there's one question, so I'm going to pause here to see if I can. So this is somebody who's a volunteer with SCORE. I'll read the question so everybody can hear it. As a volunteer with SCORE, I've come to realize that many business owners do not know how to read their financial statements, but they really should. They do not need to know how to prepare them, but they should know what to look for and ask relevant questions. There are many resources available for learning how to read them, including workshops that we run. Thank you, Dick, for that question. And sort of the fifth sort of thing I talked about, having an audit by an accountant. That's not only a great resource for making sure there are no financial irregularities, that there's no money missing, but also to help educate you in how to review your own statements and what to look for. So that's an excellent question and sort of service that SCORE provides to many of these young startup businesses. So that's what I have for today. I want to make sure it was short enough that the points got across. I didn't want to subject everybody to Zoom fatigue, which I think some of us have gone through. Are there any other questions that people have?
Just a reminder to everyone, if you'd like to submit a question, just click on Q&A and then you can type it in from there. Bob, do you have any specific things you've seen recently, trends with remote work? You talked about that a little bit. There's less oversight, but are there more things that people are at high risk for fraud-wise that maybe we've never considered before?
Yes, Emily, with remote working, there's more compartmentalization. So, and there's less physical oversight. There's less sort of interaction on a daily basis. But with that compartmentalization, you might have somebody, so whereas the mail came to the business on a daily basis and the statements came to the business on a daily basis or monthly basis, now those statements are being sent directly to one particular person who's working from home and trying to manage and juggle the finances, make sure everything is run properly. That isolation and that compartmentalization presents big risks for oversight and big risks for being able to review what's happening with the business's finances. So there are ways to, of course, there are ways to do it safely, and there of course are, I don't want to make people paranoid about this, but even with working remotely, you can build backups into the system. You can still have weekly meetings, Zoom meetings, or Teams meetings. You can make sure that multiple people are reviewing the bank account statements. You can request reports that are prepared to tie out sort of expenses and payments that are made on a monthly basis. And so there still is the opportunity for thorough oversight. The challenge is, though, is working remotely. You're not there physically, and it's a delegate and be done mentality sometimes. And so you say, okay, that person's got this. I'm worried about bringing business in and keeping clients and customers happy. And so you just have to be more attuned to the lack of oversight with the remote work environment.
Yeah, that makes a lot of sense. Well, a great presentation. Wow, those stories, eye-opening to me. It's scary stuff. I do have some chamber news to share quickly, so I'm going to put a slide on screen real quick. I just want to let you guys know about some events coming up. Later this afternoon, we have another webinar, the last one in our Mental Health in the Workplace series. This one is about utilizing human resources to help employees with behavioral health needs. Tomorrow we have kind of a last minute webinar about the Main Street Relief Program 2.0. So the deadline for that program is this Friday at 4 p.m. So if you want to apply for it, definitely do that. If you have questions about it, this webinar is a really great opportunity. We're partnering with New Hampshire SBDC for that. We have a virtual networking event coming up early November with Capital Center for the Arts. And then, of course, our Pinnacle Awards ceremony, you can attend in person or online. So more information about that and all of our other programs and events are online at concordnhchamber.com. Let me see if there's any other questions for today. That looks great. Well, thank you so much, Bob, for this great presentation. We're so grateful to you guys at Orr Reno for working with us on these.
It's great to work with the Chamber. Thank you, everybody, for coming today.
Yeah, thank you.